Good morning, my Teaserking family. How is everybody today? What a happy day for everybody. Gold is 30.30. Silver is 34. Very, very close to it. Anyway, what a big day. So gold started at we're at about 29 and finally hit 3,000 yesterday. And then China gets it. It gets it up to 315, 317. And then at 2 o'clock, it decides to just keep going. And then there's really no 4 o'clock pullback. There's no real 6 o'clock pullback. There's a tiny 10 o'clock pullback, not much. And now it's going up. And we're at 30.30. Silver's was at 34.15. At 10 o'clock, it dropped, but now it's biting back to 33.96. So happy times. So I hear these guys on their little YouTube videos, the clueless, the sheep, the mindless. Is gold going to come down? Is it too high? Just by watching the headline makes it obvious these are idiots that have no idea. And I think what they're doing is just trying to get views. They're trying to get panic. Oh my God, is gold going to go down? They clearly are clueless. Gold is not stock. We've talked about this for years. Gold is the lifeboat off the Titanic. So you're not going to have, this is not a stock. This is not profit. You don't profit take this. All right, me and you, the average guy who's smart enough to say, hey, gold's the lifeboat, let me get into it. We sit there, what do? We go, well, I found the lifeboat, gold and silver. There's nothing else. I can't get in the Swiss francs, euros, or anything. And then we realize we can't sell it and profit take it because there's nowhere else to go into. Maybe we sell to buy a house or to buy a car, but we are not selling our gold. Now, me and you have ounces, right? I go buy an ounce here and 2 ounces there and a quarter ounce here, and I build my inventory. So I might sell 1 ounce to pay a bill or go on a vacation, help the area out. Okay, that I'm selling 1 ounce maybe. But the central banks are buying 400-ounce bars. They're not buying ounces. So let's say you're Poland and you bought 1,000 tons of gold. So you have 400-ounce bars until you get to a ton, right? Let's say, I don't know what, 50 bars. It's 32,000 ounces. You got 400 ounces. So 80 bars gives you 32. Gives you 1,000 tons. 1,000 times 32, right? So what you have is they're not going to sell any of their bars. Where we might sell a quarter ounce, 30, 32. We just keep going. This is crazy. Not crazy. It's actually, this is fantastic, but so they're not going to sell a big bar of gold. So the central banks are taking it out of the supply. There's 200 and let's say 10,000 tons of gold. That's it. And most of it's gone. Let's say 209,000 tons are gone. They keep a little to print the 1 ounce coins, a little for the Indians for jewelry, and the Chinese in Singapore, as Pat tells us. So with that said, we're watching paper gold here. This is paper gold at 30, 31 right now. Not physical, which is 10 times higher. So will it go down? Well, nobody with any intelligence would think it's going to go down because, okay, let's dig into it. And this is what I do better than anybody, the problem solve. What's the problem? Will gold go down? That's the question. Let's analyze it. Well, what would cause it to go down? Surely the dollar is not getting stronger. And why would anybody in the right mind get into something as heavily inflated as the dollar? What else can I put my gold into? A house, a Rolex, a Van Gogh, a Picasso, a Mantle card. Okay. But you're not really, maybe, but that's after you've accumulated a lot. And I'm not sure, right now we're just storing the gold. And as Warren Buffett said, and I hate guys that quote Warren Buffett, it tells me they're idiots, and I never do. Warren Buffett says, well, gold just sits there. And okay, where's your money now, Warren Buffett? You sold all your stocks, you got money. What's that doing? Singing and dancing? Is it cooking your meals? Is it driving your cars? The dollars? You got them sitting in a bank like an idiot or in your safe. Either way, you're about to go broke because you don't understand. Dollars are worthless. Hold gold, but he doesn't get it. So let's stop quoting Warren Buffett. But the point is, gold is fine. What do you do with your paintings? You got a Van Gogh, you got a Picasso. What do you do with those? What, you hang them on a wall? I mean, what do you do with a Rolex? Do you even wear it? Okay, so you wear something around your wrist. What do you do with a Mantle card? Maybe you put it on your wall. I used to have these really cool shelves that you could put. They were like a flat shelf with a thing going down and slit in it. So you could put the card in the slit and put 12 cards across and display it. So I could put the Steelers of the 70s, I could put all of them there, just a Joe Green here and a Bradshaw, and then here comes Swan and Stallworth and Ham and Lambert. So I could put the whole Steelers there. I could put as many Packers as I had from the 60s, Montana and Rice and Dwight Clark, and the good teams. And so you could display your cards. But what is he even saying about gold? It just sits there. You put it in the ground. Like, what do you do with any asset? It's out your house. It just sits there. I mean, the mentality of this idiot. Shows you he's just a scammer. He's just a Madoff. He scammed everybody with his insurance. That's how he made his money. He has no idea how to invest. All he does is buy $1 million worth of Coca-Cola. Oh, wow. Well, you're a great investor. So the point is, as you look at, I've got the gold. What do I do with it? Do I sell it? What's going to make the price go down? You're going to sell it. Why would you sell it? And what are you going to buy with it? So I gave you what you could buy with it, but I think that's a very tiny 0.1%, 0.25% of the gold is going to do that. Right? You might buy this. You might buy the cards. You might buy the Rolex. You might buy the painting. Maybe. I'm not sure. Probably with your other money, you want to do that. With the gold, you don't. So the goal is to get out of dollars, get out of toilet paper, monopoly money, and get into gold. So once I'm in gold, Why would I get out of gold? I just sold all my worthless monopoly money to get into gold. So therefore, there is no incentive to sell it and profit take. This is not IBM. This is not GM, Ford, Coca-Cola. These are not stocks and companies that have gone up too high and you better get the hell out. Not gold. This is a simple, huge demand because all the paper is going to zero and low supply, creating higher money. And since you've had the money kept down, the gold pushed down, we're not anywhere close to where it should be. Where the stock market's been faked up, gold has been pushed down. So the real price of gold is nowhere near where it is. So why would you sell gold? Oh, it's hit all-time highs. That's in the paper market. And that's just because they can't find any more gold to cover their derivatives. I believe with all the central banks in China, Russia, and India, Saudi Arabia buying tons and tons of gold. And China does not own 2,000 tons, they own 60. I hate when idiots quote the central bank thing. You're clueless. So they have most of the 200,000's gone. And all we find is when some guy sells his couple of ounces and I go to the store and I buy his ounces. That's all that's happening. I told the guy about Profit's bar, and the guy was like, "Oh yeah, have him bring it in. We'll give you cash for it," because he can't get any. So this is the problem. So you have very low supply to start with, but you finally got the big demand, and that's what BRICS has done, and that's the game changer. And so therefore, they have to keep buying. And as they add countries, now there's 20, they all need gold, and they all want a lot of gold. And other countries are realizing they want to get out, de-dollarize, get out of the dollar. I hate the term. They're just, and Trump's sitting there, well, I'm going to put, 100% tariffs on these people. They need our customer. See, so Trump's view is, I'm going to tariff you because I got to pay a $37 trillion debt, which you're never going to pay. I'm going to sell citizenships at 50 grand a thing, which I doubt. And then he's like, well, I'm going to tariff everybody, and that'll get us 37 million in. And this way, I don't want to tax people because if I tax you, it takes money out of the economy. So I want you to hold it because he understands the private sector stimulates the economy more than the government does. So with him and his tariffs, nobody do they want to trade with us? Well, we don't have any money that's any good. We have a lot of people who can buy because we've been Austrian economics, which we're now folding away into socialism land. And we all are like shaking our heads going, you can't do that. Why would we do something that's never worked in the history of life? But we'll make it work. Unbelievable. So we have, what reason do we have to sell our gold? And you're dealing in big 400-ounce bars. You're dealing in tons. So why would Poland sell their bars and profit take? What would they do with the money? They're getting out of the dollar. That's why they're buying gold. So if that's the whole point of the whole exercise, they're getting out of dollars, and they go, and their only option, the only lifeboat's gold and silver. Why would they sell it? You wouldn't. And the only reason the price goes up and down is the derivative market. But guess what? When they do a derivative, the other side's saying, I want to take delivery of the gold or the silver. There's none to get, right? So if you don't have any to get, what are you going to do, right? So I can't keep shorting these derivatives, shorting the gold and silver, because there's nothing to get to cover when they want physical, and everybody wants physical now. And that's what's going to blow up the COMEX market, is it's not set It's not created for physical transactions. It's all a price fixing mechanism, which said, well, we want to fix the price of gold and silver. And it worked for a while until people wanted physical. And that's what's happening now in the last few years. That's why you see $2,000 gold, and now you see $3,000 gold, and you're going to see $5,000 gold, and you're going to see $20,000 gold, because there's no profit taking allowed in this little game. It'll blow up COMEX, and then people will, as the rest of the countries start, Britain and Germany and France and Italy, and they keep buying gold. And I know they have. Germany, Italy, and France already have gold, and they'll buy more. We know Africa, they all have gold there. And we know Asia, Hong Kong, everybody's buying gold, except the US. We're smarter than everybody else. And we got Trump running around like a 5-year-old going, oh, if you get off the dollar, why don't you fucking compete, Trump, and make it worthwhile for them to stay with you instead of forcing everybody. Nobody wants to be forced, so everybody's leaving you. And then you cry, you're like a little kid at the playground. Well, I'll take my ball and go home. Nobody can use it. And that's the problem. So what I see happening is, why would you have any profit taking? That thought has never crossed my mind. In gold, it has in stocks. When I day traded the gold stocks, I'd go in at 10:30, quarter to 11, and then I would then watch the algorithm go up. I'd go up, and I didn't care if I lost a dime. And it goes up 70 cents, 80 cents, and then I get out. That's how you play the stock market. You can't trust it. It's all Madoff. Come on, Madoff was running it. You think you're going to trust it? So this is the thing. That's the only way to play it. But I'm still making dollars. See, now I don't do it because I want to buy physical. Because even if I make $50,000 in the stock market, it's dollars. It's monopoly money. It's not worth anything. So the only thing I can do is get into gold, which is what I did. I got out of that into physical. And that's what I did. So if I'm in physical, there's nothing I want to do is sell it. But you know what? Even if we all sold it, it wouldn't register because COMEX controls the price, not the market. So if everybody sold 100,000 tons of gold, the price would still probably go up because it's based on COMEX, not the free market. So when we look at a Montana card, we look what eBay says, oh, it's 110,000. That's the value of it because that's what somebody bid and sold, and that's fine. But with gold, that's not what's happening. Gold is being controlled by paper, by derivatives. So they're not going to push the price down because they can't, because everybody will take delivery and there's no gold. There's not enough gold left to make the delivery on. You can see the US now is running around like a chicken with their heads cut off, trying to get gold to pay down the derivatives. And they got till July 1st, and you can see what's happening. They can't. I mean, they can't control the price. It keeps going up. They can't pay the deliveries. They got to wait 8 weeks to get a delivery from England for whatever reason. I heard it was to convert the 400 ounce bars into 100 ounce bars, possibly. I heard Switzerland, most of their gold places are refineries are backlogged and can't take anything. So you refine your gold in Switzerland. You turn it from Nazi gold to American Eagles or whatever to whatever. And they can't, they got like 8 of them and they're all used. They're all backlogged. So you can't even get the gold to pay off the derivative. And with Basel III, you have 1 day to do it. And they're running, a year behind. So in our world, what we understand with this game, in this game, what we realize is the gold uh, being manipulated by derivatives, options, contracts like that, and then they have to actually deliver the physical. They can't control the price anymore. It's blown up. Too many people want the delivery, want the physical. There's not enough physical left to do it. So is gold going down? Not a chance. How can it? What's going to drive the price down? Who in their right mind is going to profit take something that you're getting out of the dollar to buy, and then there's no other lifeboat. There's no lifeboat for gold. Right? You have a lifeboat. You have a lifeboat for the dollar, the yen, the yuan, the euro, the British pound is gold and silver, but you have no lifeboat for gold and silver. Maybe, like I said, a Picasso, a Rolex, a Mantle card. Okay, those are kind of lifeboats, but you'd rather be in the gold and silver. That's your first choice. If you get enough of it, then maybe you buy those. So there's no way this price is coming down. This price is just going to keep going and going and going. And now that we broke 3,000, I would expect 3,500 soon. It's March 18th. I'd say by the end of the month, we could be at 3,200, 3,300. It's just going to keep going. Silver finally is breaking 34. And at that point, I don't see that coming back. And these bullion banks are going out of business. Jamie Dimon, you can see he ran. He took the money and ran. He's retiring before he gets the shit kicked out of him. So he knows they can't cover the derivatives. So they're the ones who caused this mess. They keep doing derivatives, shorting the price. And the problem is they got to settle. And they got to settle now. And they can't. There's no gold to settle with. So they're all going to default on them. Say goodbye to JP Morgan, Goldman Sachs, a lot of these bullion banks. There's 8 of them. Say goodbye to 8 bullion banks. I think there's a few in London. Canada might be one of them. London. Anyway, so nobody's dropping the gold price because the way it's controlled is by the derivatives, and they have to pay in physical, and they can't get it, so they're not going to do it. Probably not in silver either. You got to understand, you can't see it. But it's like if you had a pile of gold, here's the floor, and the pile's up here, and we got 200,000 tons, and China's buying, and Russia's buying, and India, and Saudi Arabia, and Dubai. The pile's down to like this now. This is all the gold left, if it's not here. And it could even be lower because of all these double and triple sales. What are they called? I want to say refabrication. That's not it. Anyway, because of all these problems, there's not as much gold as you think, because like the U.S. has I can't think of the word. We've already sold our gold to China. Now we might still show 8,000 tons, but it's not ours. But we're showing it and China's showing it. So there's an extra 8,000 tons that doesn't exist. It's in China's hands. How do we count it? We don't have the gold. But they'll do anything, and it's very hard to audit. Nobody knows how much gold's really out there. And same thing with silver. I believe it's 210,000 ounces of gold, and I thought it was about 550 or tons, 210,000 tons of gold, and about 550,000 tons of silver. It could be 700,000 tons of silver, but I don't think there's more than that. I saw something where it said there was like 1 million tons, and I don't buy that. I looked before, and it was I looked before, and it was 550. So I don't know how it got to a million. I don't buy that. So let's say 700,000 tons. There's nothing left. Again, 700,000 tons. What are we at now? And it's pretty much maybe here, which blows up COMEX. The fact of the physical delivery, COMEX is not a physical game. It's a paper game. I'll do a derivative to raise the price. I'll do a derivative to lower the price. Can't do it. They're taking deliveries. So since they're taking deliveries, it's gone. It's less. It's less. It's less. But there's also what they've already bought, right? So Russia keeps buying silver. China's got tons of it. India needs it for the solar panels. Saudi, believe me, all these big countries have a lot of silver also, not just gold, because it's money. So that's where we're at. It's controlled by the big countries. So you're not going to see these prices drop, because if they have to cover the delivery, what are they going to cover it with? Where are you going to find, the 300 tons of gold or 300 tons of silver? Where are you going to find that at? And for you people wanting to invest in gold stocks, you got to be careful, because their inventories are being depleted, either by COMEX or by Russia, China, and India. So you think, oh, wow, when gold goes up, the stocks will go up. Well, no, because their inventories will have nothing in it. So a higher gold price and less inventory is not going to make the stock go up. All right, what else? So Trump cries about tariffs. I just think I don't even think it's real. He's desperate to pay off the $37 trillion debt. He's a businessman. Maybe he understands that. And so how do I pay it off? Well, I can't tax everybody, because then it takes money out of the economy, and I'll have a civil war in my hands. So he wants to go after the countries who are doing business with us, but they're all doing business. I was watching this BRICS thing, how much business China does with Brazil, and how much Russia and China do business, and how much China and Russia do with India. And so all the BRICS countries are trading amongst themselves without doing that FX swap to dollars. And so when they do that, they're not using dollars at all. So how do you threaten people with tariffs when they don't even use the dollar now? China doesn't want our goods. They just sell to us. There's nothing we make that China wants. We don't make anything. We sell Bitcoin, and we sell, and that's not even ours. And then we sell mutual funds and, treasuries. We don't sell anything. Name a product we make. A car. They don't buy our cars. They don't want our cars. Our cars are crap compared to Mercedes and Toyota and stuff like that. So I'm not sure I'm getting, now they want to sell to us. So China does want to sell to us, but they're selling to all the other countries. So what China's figured out is we'll move our factories to Vietnam. There's no tariffs there. So all the factories are now in Vietnam, and they come in without tariffs. And I assume Mexico will find a safe haven, and Canada will find Finland or Sweden, and they'll ship it in, and then there's no tariffs. Oops, Trump's tariffs has a little minor flaw in it. Nobody's trying to get rid of the dollar. They're just trying to get a better currency backed by gold, which anybody would, because everybody knows if it's backed by gold, it has a better. You can't inflate it to zero, and they see that's what the dollar's doing. So he says to compete with the dollar. Well, you could sell rocks to compete with the dollar. They probably have more value. What, paper, rock, scissors? So what has more value, the rock or the paper? Which has more value? I'm going with the rock, and we can all we can all smell what the rock's cooking also, or scissors. So what we have, Trump crying about tariffs and this and that, and I don't think anybody cares because our money's not worth anything. So at the end of the day, do I really want dollars? And what am I going to do with the dollars? Here we're in America, so when we use our dollar to go to, uh, Kroger's or go to Capitol Grill or whatever, it's okay. It's priced in dollars. And the prices have gone up because some of the ingredients they probably have to get from other countries. And it's going to be more expensive. But I don't get why the pound and the euro are worth more than the dollar. It just doesn't make talk about two different currencies that are worthless. It's definitely the pound. We're seeing more and more countries are bankrupt. As Austria's added to the list, China's been on the list, Russia on the list. So you see all this, and you just, anybody using paper money, it'll go to zero, which then helps the demand for gold. But again, you're not going to profit take gold. Do you profit take a Picasso? Do you sell the Picasso? Oh, it went up from 1 million to 2 million. Am I going to profit take it? The only thing I know is Gretzky profited taking the Hannes Wagner card. He bought it for like $1 million or $2 million, and he sold it for like $3 or $4 million. I can't imagine why he needed the money, but I know he did sell the card. Stupid thing, but okay, because it's an asset, right? So you want to own physical assets, not Bitcoin. And that's where you're at with it. So let's get into some other areas. So let's look at the NFL draft. So in the NFL draft, I don't really see an update. Basically, you have Cincinnati signing Chase and Higgins, both land 4-year extensions with the Bengals. I think it's a lot of money, $40 million for Chase. And what did Higgins was $20 million. No, 30, about $27 million. That's a little bit high, but okay. But Chase, yeah, he's worth the $40 million, but it's still a little bit high. It's hard because you got to pay Joe Burrow because you got a superstar quarterback. You got to pay $40 million. So let's see. All right. So it's good, but now how are you going to get defensive help for Cincy and a running back? How much money do you have left? So you basically have a great offense and that, so they're going to be, that's an over team. That's a mistake. That's like Miami did that. The Bears did that with their 3 receivers. Seattle, that was a terrible experiment to go get Smith and GB when you had Lockett and DK Metcalf. Now you've lost Lockett and DK Metcalf for Smith and Jiba. That's a horrible move. DK Metcalf was the best. So Seattle's collapsing. They're lucky to go 8-8 next year. You can't waste your money on receivers. As good as Chase I get, but you can't. T. Higgins you should never have paid. You needed a running back. You could get a receiver from Texas Tech in the 5th round to replace T. Higgins. He's not that good. Excuse me. Now, I don't know about these defensive players if there's that many of them out there. Hutchinson gets hurt. The guy on Cincinnati, Hutchinson, he was a little hurt. He's 31. Now, I love how they look at age. That isn't old. I mean, in the NFL, the problem with the NFL is you want them to play 17 games. Way too many. Then you want them to play Sunday night and Thursday night twice. That's a huge problem. We're worried about their safety. So we'll make this stupid kickoff rule. And you can't even do an onside kick until the fourth quarter. Who's coming up with these idiot rules? You should be able to onside kick anytime. And it shouldn't have to be declared, and it should be a normal kickoff. We're worried about safety. Oh, really? 17 games. You play Sunday, Thursday twice. Yeah, you're really worried about the player's safety. What, are you kidding me? What a bunch of lies that is. So that's bullshit. But you can't pay a quarterback and two receivers. Like the Lions, they overpaid for golf, and then St. Thomas, they paid a lot. Then they paid both their tackles a lot. Whoops, we can't afford a defense. Yeah, good luck, fellas. Let's see. Cooper Rush goes to Baltimore. He should start instead of Lamar, but he probably won't because everybody loves Lamar, even though he can't win playoff games. Okay. Aaron Rodgers, we're still waiting to see if indeed the Vikings are the front runners for landing him. If I were the Vikings, I'd pick him up in a minute and say, yeah, McCarthy, we have no idea. You sucked at Michigan. We don't even know why we drafted you. He's not in shape. He's lost a lot of weight. He still has the knee injury. Get Rodgers for 2 years. You'll win because you have Jefferson and you have a great defense. And you have no idea what McCarthy is. He wasn't good at Michigan. All of a sudden, he's going to be good here because he threw one good pass. Oh, okay. Makes sense to me. He's not good and he's always injured. So I don't buy this guy. Huge mistake if they don't get Rodgers. They want to win a Super Bowl finally, then this is the key to it. I don't know why everybody has a problem with Rodgers. He's just misunderstood. He seems stoic to me. But if you can get a talent like that, you got to pick him up. What else do we got? Darryl Stingley, one of Bobby's LSU guys. He was great in college. Notice how he's from LSU and not Alabama. So you got a big deal. NFL free agent deals this week. Most of the big free agents, including Sam Darnold. Milton is not a big free agent. Williams, I don't know who you're talking about, and Joey Bosa. Josh Allen, Max Crosby, Myles Garrett stayed where they were. So Arizona signed Josh Sweat, which was a good thing on a bad team, bad coaching. And Jacoby Brissett's now the backup, which I don't know how he's still in the league. Atlanta signed Divine Diablo, a linebacker, and Leonard Floyd, an edge. I don't know. Baltimore signed DeAndre Hopkins, and now Cooper Rush. That was their best. Cooper Rush is their best quarterback. But everybody, oh, it's Lamar. Yeah, okay. Good luck with that. Buffalo re-signed Josh Allen. Shakur. They signed Josh Palmer. I have no idea who that is. Signed Michael Heck. No idea. Signed Joey Bosa. Okay, that's interesting. But I think they let go of whatchamacallit, their linebacker. Can't think of his name. Bad day for memory. Larry Ogabugla is signed a defensive tackle. A couple of safeties signed and re-signed. Never heard of them. You know the linebacker I'm talking about, the guy who beat New England when he had 15 sacks on Brady. Von Miller. Okay, so I think they let Von Miller go. It's funny how I don't think of it when I'm trying to think of it, but when I'm not trying to think of it, it pops in. So Boza for Von Miller. I thought Boza wanted to play on grass with his brother in San Francisco. Funny how that didn't help him. Carolina signed a defensive tackle and a safety. I never heard of these guys. They're signing them to $18 million contracts. Patrick Jones, an edge, 10 million. So I can tell 10 million. Andy Dalton re-signed. I can't believe they're not starting him. The Bears signed Deo Odabagaga, edge. Grady Jarrett, defensive tackle. I've heard of him. Drew Dolman is a center. No idea. Jonah Jackson traded, I assume, from the Rams. He used to be good about 10 years ago. Joe Tunney, they got him from the Chiefs, another offensive lineman. But the problem is there's no continuity. So just because you just can't add somebody to the line. Signed tight end Dermon Smythe, real big name there. And Tavarius Moore signed a safety. I have no idea. And Omad Zacharias, a wide receiver, they signed. Okay. Cincinnati. Bunch of re-signs. They signed Tedrell Layton, defensive tackle. Sammy Paran, they signed. He was also at Oklahoma, but he wasn't that good. I don't know where they got him from. Mostly it's a re-signing. Gesicki re-signed. And they don't show the two receivers. Well, that just happened. Cleveland re-signed Myles Garrett, as we know. Kenny Pickett came from the Eagles to a backup quarterback. This is the problem. They need a quarterback. And I'm not sure how healthy Hunt is, the running back. Or no, Nick Chubb, how healthy he is. Or Hunt. They signed an edge rusher, never heard of. If you sign an edge rusher for $475, he's not very good. Devin Bush re-signed 1-year deal from Michigan. Dallas signed Solomon Thomas. That's it. That's the key to it. They got Solomon Thomas. Rob Jones, an offensive lineman. Javonte Williams, a running back I've never heard of. Peyton Turner, defensive end. 1 year, $3 million. The guy must suck. Miles Sanders, the name's vaguely familiar. Dante Fowler signed 1 year, $8 million. And Cooper Rush, so he must have signed and then got traded to Baltimore. He got traded for Tom Manny. So again, does this help Dallas? Nope, you still have Dak Prescott on your team. Denver, Jarrett Stidham re-signed back up to Bo Nix. Dre Greenlaw from San Francisco. That's good. The Detroit Lions re-signed Derek Barnes. I don't know. Marcus Davenport. Zeke Turner. Who the hell is that? Morgan Cox. Well, they're really going after some big names here. Anthony Pittman. 1 year contracts. DJ Reed signed cornerback. Roy Lopez, defensive tackle, and Dan Skipper, offensive tackle. Wow, they've vastly improved, haven't they? So they signed two guys, a cornerback from the JETSs, and Roy Lopez, who I have no idea. 1 year, $4 million. He's not very good. Green Bay, hey, Prophet, how are you? Talking a little football. We've already discussed gold about it dropping. It ain't going to drop. It's at 30.30. Silver's this close from 34. We need to break that and get it into the 40s, and then it's to 100. No, I didn't say it dropped. I said it won't drop. You're tardy for class. You miss these things. The question came up, is gold going to drop on one of these other videos? And I says, and we looked at it thoroughly. People with the gold aren't going to sell it. The only reason it's going to drop is because of derivatives, because it's not in the free market. That's how you price it. But there's no gold left to do a drop in derivatives. So you're not going to be shorting gold at this point. You've got to be out of your mind. So if you're not going to short it, then you're buying it. And the derivatives are blowing up because everybody's buying physical, because COMEX wasn't made to do physical. It was made to be manipulated paperly as a way to set the price. But as you can see, they haven't been able to keep it. And now with BRICS, it's all over. COMEX is bye. 30.31 right now. Yep. And it blew right through 3. Once it stayed a day or two at 3, got up to 29.90. Then it blew 3,000. Once it blew 3,000, it took a while. Now 30.31. I think we'll probably see 3,100 by the end of the week. Is this going to go? We'll see 3,500. And so again, I make you money holding your bars. Well, you don't even have them yet, but this ain't nothing. We'll see 3,500 soon. And this is what I've been warning everybody. You're not going to be able to, if you can find it, to afford the gold. 4,000 an ounce, you're going to pay 4,000 an ounce. It's going to be tough. You can do it with your bars, but most people probably couldn't afford it at 2,500, and now it's 3, and now it's going to be 4. And are you going to be able to afford it? And the answer is, well, that's why you get rid of monopoly money. And that's why silver's going to jump, because, well, I want to buy gold, but it's 4,000 an ounce. I can buy a quarter ounce for 1,000, or I could buy a bunch of silver and wait for silver to go from 35 to 500. And that's the prudent play. But if you can still buy gold, you buy it. I mean, it just comes to a point where you just keep buying it. It doesn't matter. Nick Maida, wow, where have you been, Nick? I haven't heard from you in many moons. Been holding for years now, finally seeing the good gain. Well, you're welcome, Nick. Yeah, I very, very honest and very, very analytical, as you know, from football, and that's what I looked at. And basically, this ain't nothing yet. You're gonna have a 10 in front of this number. You'll see 13,000. And again, you got to understand it's price fixed by derivatives, not by the free market. So when I show you the Montana card at 100,000, that's how the free market went, right? And that's where gold would be if they got out of the way and let it just run. And that's what we're waiting for. And I think we're here, because I don't think there's any gold left to cover the derivatives when people want physical and they have to deliver the physical. You can't find it. So you're going to have to pay more. So why do the derivative? Because it's obviously gold not going down. Nobody is profit taking. You do not profit take gold. If you need to sell an ounce because you got to go on a vacation or you got bills to pay, that's fine. Otherwise, you can't. You're not. If you're sitting on 100 ounces of gold, you're not selling the 100 ounces. That's like getting back on the Titanic. Well, I'm on the lifeboat. Let me get off and go back on the Titanic before it sinks. What's your option? You're going to buy U.S. dollars, euros, British pound? I mean, there is no option. The only option is gold and silver is to get a Picasso or go buy a Mantle card. Or Rolex. There's no other real options. Nick, your Rolex must be doing quite nicely also. The longer you hold them, the more valuable they get, because they're extremely limited and very highly in demand. Even though people don't wear watches anymore. Silver is up as well. Yeah, silver's broke 34. Now, somebody told me 33 was the point, and I said, no, it's 35. 35, we see 50. And the way it's going, you're not going to see 29, 30 anymore. jump through 33. Now it's 34. It'll get to 35, and then it's going to be boom, because gold's getting too expensive. But silver is every bit of money as gold is constitutionally and everything else, and that's why it's Roman law. And that's what it is. And every big country who's ever been a strong number one has always had gold and silver. That's how you become number one. Then you go to war for some reason and you spend it all for military, and then you're not number one anymore. It's the stupidest thing I've ever seen. If I got gold, why am I going to war? What can I possibly go to war for? I'll just buy whatever I want, but that's crazy. Where did you move to, Nick? I know you were talking about it, but I got some news on the housing market crashing. So I hope you don't get hurt by the housing market. It's crashing big time. All right, Houston. They bring in Kristen Kirk because the other guys have been injured. C.J. Gardner-Johnson, boy, Philly's in big trouble. They let him go, or they traded. Trevon Smith, they signed. Sheldon Rankins, I've heard of him. Darrell Taylor and Edge, they signed. Braxton Berrios, a wide receiver. Justin Watson signed. Mario Edwards re-signed. Lincoln Tomlinson's a guard. And that's it. So they brought in a lot of defense, which I don't understand. They need a quarterback and they need running backs. Kind of confusing here. Indy did nothing. Oh, well, they brought in Daniel Jones, and Charvarius Ward. 3 years, $60 million for a cornerback. That ain't going to help you, Indy. You need a quarterback. You need running backs. Pretty pathetic. Nick, just an apartment in New Jersey. Price is too expensive in New Jersey. Looking to move to other states. Yeah, well, let me show you this to kind of help. Europe is falling apart right before our eyes, but I'm not going to talk about that right now. We are going to, I think it's in my playlist. The housing market, doomsday. This is 1 day ago, 100 times. Huge mortgage collapse, 50% drop. So we can quickly look at this.
This credit card has an interest rate that's really, really low. How low? This low. The credit card that's in your wallet right now.
Financial institutions are deliberately downplaying. Why? Because acknowledging the housing market isn't just crashing, it's imploding at a rate that will destroy trillions in American wealth within months. What we're witnessing is a perfect storm of economic forces creating the most dangerous housing market in American history, one that makes 2008 look like a minor adjustment. These conclusions are drawn from extensive data analysis that mainstream financial institutions are deliberately downplaying. Why? Because acknowledging the full scope of this crisis would trigger widespread panic in financial markets.
Cool.
What the data shows today is unprecedented, and the implications for homeowners and investors like you are severe. Let's start with the most alarming
We invest
indicator,
in gold,
the
fella.
complete evaporation of buyer demand. Mortgage applications have plummeted by 60% from their pandemic peak, double the 30% decline we saw during the worst of the 2008 crisis. The acceleration of this trend is particularly concerning.
Okay, so let's explain that. As inflation goes, which is printing more money, making it worth less, you don't have, your money's got to go elsewhere. You're paying your bills, your food, and everything else, and we don't have printing presses. And then you got interest rates that are fairly high on houses, I think 7-8%. And which what that does is there's no demand for the house. It's too expensive. So as I love talking, here's our market for houses and here's your prices. Because it's not only the price, it's plus the interest rate. So now you have prices here, but the market here. I mean, here's how I do charts, right? This is the point, right? This is over this. So for the housing market, it's got to come down. And that's what the collapse is. The collapse is this price coming down to the market. But the market, where it was here, is dropped because of the inflation. And so when you add the price and the interest rate, you're way up here. So you got to lower the housing price down to here. So I don't need no crazy Keynesian talk. That's what you need. You need to find out where the market's at. So you can continually sell at 500,000 with 8% interest, and it's $5,000 a month. It's not worth, the house isn't worth that much because there's no buyers there. So it's like trying to sell my Montana card. It's like trying to sell this. Let's keep it to Canadian Club. I'm trying to sell this for $500. Well, there's no demand for $500, even though it is 12 years and it's Canadian Club. The market's at $100. So I got to sell this at 100. I can't sell it at 5 because it's not worth 5. Simple, right? I mean, that's the bottom line. It's what the market will bear. And so you can't sell it over market. The market's here. I can't sell houses here. I can't sell cars here. I can't sell Camrys here. I can't sell ribs here. Any product must go to where the people are willing to pay, because this is free market Austrian economics here. Even though the Keynesians are trying to do their little bullshit, it doesn't work. At the end of the day, we're the ones with the money. We decide what we'll spend and what the prices are. And that's what's happening in the housing market. All right,
Last quarter, we've seen an additional 12% decline in mortgage applications. It's not a gentle declaration. It's a market in free fall. The fundamental driver behind this demand collapse is an affordability crisis of historic proportions. According to the National Association of Realtors Housing Affordability Index, housing affordability has reached its lowest level in the 40-plus years this metric has been tracked. The average American now needs a household income exceeding $115,000 to qualify for a mortgage on a median-priced home. Let's put that in context. The median household income in America is about $75,000.
So basically, just as we said. So what you have to understand is it's not you need $200,000 to buy a house. The housing prices need to come down. So I don't know who has the houses. This is why they can't sell them, right? They're trying to sell the house and there's no buyers because you're way overpriced because of the inflation. The Keynesians will say that's deflation. I say that's the market. That's caused by inflation, as everything is, but that's the market. The higher interest rates and the value of the dollar dropping creates the price creates why nobody can afford it. If you really want to sell your house, you have to make it to the market. So if I was selling a house, I would find out what the market's at, and that's what I would sell it if I really wanted to. But I'm living in a fantasy land. If I think, well, it's worth 500, I'm going to sell it for 500, and there's no buyers, then I'm living in a fantasy land. It's not. That's bullshit. You can't. What is the market? It's just like, well, it's not like gold because gold uses COMEX, but like Canadian Club. I mean, you go to the grocery store and you want to buy a Coke and it's $3 and you say, fuck, that's too high. I'll go buy Squirt for $1.99. Or Coke is clever and they go, well, you buy one, you get one for free, or you get one half off. And that's how now you can afford it, because we've actually lowered the price, but indirectly. So people selling their houses, they're not going to sell it. If it's banks, they're all going to go broke anyway, because they got to keep paying the maintenance, the property taxes, and everything else to keep the house running. That costs money. It's not free. That's why banks should not own houses, or BlackRock shouldn't own houses. And then, well, we're going to charge $1 million for them. Well, good luck. You're not going to sell any. Nobody's this stupid to buy it. Yeah, profit silver is up also. We understand that. So that's your housing market. That's in America. It's just getting killed. Now we have this in Shanghai. Big trouble in Shanghai. 3 million flee, panic, housing selling. So don't move to China yet, Nick, until they're.
This is Meat Bar Pro. This is a phenomenal solution for a medium-sized conference room like this, or
Nobody cares.
Let me tell you, the real estate market in Shanghai has completely changed. Last night, I was checking secondhand housing data, and my hands were shaking. 160,000 listings, a total of 160,000 properties up for sale. Right now, out of 10 people on the street, 8 are trying to sell their homes. Did you know that? People don't even ask where your house is located anymore. The first thing they ask is, have you sold your house yet? Listing prices are dropping 3 times a day. Take Pudong, for example. Just last month, school district apartments were selling for 80,000 yuan per square meter, and now homeowners are willing to negotiate at 65,000. There's a development on the Outer Ring Road where over 400 homeowners are rushing to sell, and prices have already fallen below 2019 levels.
There you go, Nick. Move to Shanghai. The prices are dropping. See, China gets it. China sits there and says what? They go, oh, we got to lower our prices. We can't sell it. In America, they're no, we can't lower our prices. We'll just hold on to it. We'll get there. We'll figure out we got to lower our prices because there's no demand for it. So China's really fucked. Central bank going bust. Alligator. I got to try this castor oil, Celtic salt, and baking soda. China's credit system collapses. 90% of workers, founders trapped. Let's take a look at that one.
Entrepreneurs and office workers in Hefei are facing a collective credit crisis. You could be the next victim. The numbers are heartbreaking. 9 out of 10 entrepreneurs and office workers in Hefei are in credit trouble. Small business owners are seeing their credit cards completely blocked, and office workers are struggling with mortgage payments. This is not an exaggeration. Within 3 years of the pandemic, the average debt of entrepreneurs and office workers with 30-year mortgages has surged by 200%. What's even more alarming is that these people, who create 80% of the country's jobs and contribute 60% of tax revenues, are being pushed to the brink by an outdated credit system. Over the past year, I've observed a troubling trend. A government worker earning 3,000 yuan a month has a credit score of over 750, while a business owner who pays millions in taxes ends up on the blacklist. Ridiculous, isn't it? The current credit rules are punishing those who actually do the work. If you fail in business, does that mean your credit is permanently destroyed? If you miss a mortgage payment, does that mean you'll never recover? Right now.
Now you know why you don't want to live in a communist country, right? I don't know that they'll block our credit cards, but they could. Well, they block them. If you have $10,000 credit and you're at 10,000, you can't use the card anyway. So it's best you at least pay minimum payment. Me at the poker table, I put that up there yesterday. Let's look at Egon today.
I believe strongly that the stock market is going to collapse. Whether it's going to do it this year or not, I think there's a high risk that it will do. Stocks are massively overvalued, but that overvaluation, no trees grow to heaven. We're not just going to see a correction now. We're going to see a major downturn in stock markets and a very long-term downturn. It could be years, or it could be decades, just like between 1929 and 1954.
So you haven't been to Kim's house.
All this good news today. Central banks going bust. This is what I'm telling you. Nobody has money, and they've been dealing with paper monopoly money. And this is what happens when you deal with paper monopoly money. You get off of gold, where this is like I said, eating a piece of chocolate cake every day. It will consume you. You will get fat. You will get sick. There's no question about it. And that's what you do with the dollar. When you keep printing it, this is what happens. The whole thing turns to shit. Nothing's worth anything, except for gold, silver, and a few key assets, a Rolex, a Mantle card. Now you see the method to my madness. The housing market, I told Nick 2 years ago, he wanted to buy a house. I says, no. Luke wants to buy a house. I says, wait. Let the gold go up. Let the housing. See, the housing's going to go down like it's doing in Shanghai. They can't sell it. They need the money. They're going to dump it. People will need money. They're going to dump their stocks. They're going to dump their real estate. They're going to get their money out of the bank, especially all the foreigners, people from Germany and Russia and France and Italy who have money in the U.S. economy because of the safe haven. I think they're starting to realize that it ain't safe haven here. And that's what you've got to know that. So keep that in mind. But everything's collapsing mostly because of the inflation. The money has no value. That's why things are getting more expensive, because it takes more dollars to buy it. See, it's really the inflation nobody realizes. Oh, I can't sell my house. The money's worthless. So you don't want to lower your price, but there's nobody who can afford it because everything's gone up in price because the money's worthless. And we're not getting raised. You don't go make 100,000 and now you're making 200,000. You still make 100,000 if you don't lose your job. You're lucky to hold your job, more or less, get a big raise, but yet the money's worthless. So this is why the only lifeboat is gold. That's it. That's all, folks. Gold and silver. That will save you. Nothing else will. You guys want to get into real estate? No. Just keep it simple, stupid. Kiss. Just buy gold and silver. Why are you looking for? There's a guy at Swim. He wants to buy houses and fix them up and sell them or rent them out. And I'm going, just buy gold. Why do you want to make money that way? Just buy gold and silver. What I don't get why you want to make it harder than it is. All right, let's listen to Alligator with central banks going bust.
We're a locally owned teen. You are trading fraudulently, and indeed is a criminal offence in most countries to do so. You are trading fraudulently, and indeed is a criminal offence in most countries to do so. But that is the position which all central banks are in today, and it's been particularly true if you look at the situation of the Bank of Japan, whose equity is so far underwater. You can see that the financial destruction could be absolutely enormous.
And Japan's going bankrupt also.
And the question then becomes, how far does it go down, partly? And what the hell's the Fed going to do about it? Well, if you look at it purely from the point of view of any trading entity, if your equity is wiped out by losses, mark-to-market losses, if you like, or even trading losses, then you are trading fraudulently, and indeed is a criminal offence in most countries to do so. But that is the position which all central banks are in today. Of course, as you imply, people don't worry about this terribly because they say, well, they can always print more currency. That is obviously true, and it's been particularly true if you look at the situation of the Bank of Japan, whose equity is so far underwater. I mean, because the Bank of Japan owns roughly 60% of Japan's debt. The JGB market And I mean, this is enormous. And so the equity, I mean, last time I calculated, I mean, the figures are not that material, but it was something like 40,000 times underwater. I mean, the equity was.
So you can't just keep printing money because the money becomes worthless. I don't know what the hell is he talking about. You can keep printing it, but it doesn't have a value. That's what they did in Germany in the 20s. They were printing 1 trillion marks a day, and it was just wallpaper. It wasn't worth anything. Hence the wheelbarrow. I don't know what the alligator's talking about. You can't. You could theoretically, but what you're printing is monopoly money, so it has no value.
Was so insignificant compared with the losses. The second thing people say is, well, there is always the other backstop, and that is that central banks are owned by governments. They're a government agency, and so they are backed by the, if you like, the tax revenues of government, ultimately. Now, there's an argument is pretty specious, because if you look at certainly the US, you look at most of the European countries, so take it as the EU as a whole, the UK, and also Japan, these countries, these nations, these units are in debt traps. In other words, their economies are not growing sufficiently to pay down the debt, or if you like, to cover even the interest on the debt. Now, under those circumstances, this is called a debt trap. And inevitably what happens is that the lenders, if you like, the creditors, demand a higher interest rate in return for this extra risk. Now, this is particularly apposite at the moment, because if you look at the US economy, it's stalling. It is actually, I mean, on any sensible calculation, it is actually going backwards. The private sector is contracting. And the reason I get there is quite simple. And this is on official figures. The Congressional Budget Office's own figures say that the US economy is growing at 4.5% in this fiscal year.
Feels like a dream, feels like magic. Now I believe I can have.
Jesus
But
Christ.
the budget deficit is 6.5%. Take 6.5% away from 4.5%, and so you've got a private sector which is contracting by 2%. Now, that's in nominal terms. As well as that, but if you take the official rate of inflation expected by the CBO at 2.9%, you're looking at a contraction of 5%. Now, we can calculate it for this year. You can also do the same calculation for the previous year, and the year before that, and the year before that. And of course, the COVID year was a real economic disaster for the private sector. So I think what's happening is that people are beginning to understand that this is the problem. So in effect, you've got a contracting private sector GDP, which is meant to support this increasing level of government debt, which in the US case is increasing by roughly 2 trillion a year. So where is the revenue, if you like, to back all this? The revenue isn't there. So you've got, on the one hand, you've got the revenue diminishing. You've got that debt to GDP ratio. This is, this works out at the GDP actually contracting, if you look at it, taking that distortion of extra government inflation pushed into the GDP. Consequently, the idea that there is the backing for central banks is just not true. The ultimate backing isn't there. And we have to tie this in with the credit bubble. Most people don't really understand they're in a credit bubble, but you've only got to look at the other side of credit. Look at debt. Oh, yes, we're in a debt bubble. We all know that. So if we're in a debt bubble, we are in a credit bubble. And that credit bubble is the biggest ever seen in the history of the world. So that is now beginning to topple over. And we see this with stock markets in particular. We see it with cryptos like Bitcoin. We've also got, which is very alarming, I think, a combination of events, which we saw in 1929 to 1932. That is to say, the unwinding of the credit bubble of the Roaring Twenties, which was brought about by Benjamin Strong at the Fed, who was if you like, a monetary expansionist. And at the same time, you had the Smoot-Hawley Tariff Act coming in, which increased tariffs by an average of 20%, and some saying, there were cases where it was more than that. And what happened? You had other nations, I think something like 67 trading nations at that time responded by increasing their tariffs against the US. So you had this tit for tat thing, which suddenly, along with the credit bubble bursting, just threw the whole world into a depression, and particularly America, where some 9,000 banks went bust. This time round, of course, we can't allow banks to go bust. And okay, they're not small two-branch banks, which was sort of typical in America in the late 1920s and into the 30s. But the Fed's going to have a problem. How can it rescue? How can it underwrite the commercial banking system if it is deeply in negative equity and it is becoming apparent to foreign holders of the dollars that they're not getting compensation for the risk of holding those dollars, so they're selling dollars for gold, which is actually what we see at the moment. As far as the Fed is concerned, the only result, if you like, of their trying to rescue the entire financial system in America will be to drive the dollar down. Because part of that is going to be suppression of interest rates, which will be rising. So, this is a situation which I think people are not really aware of. I mean, for a start, they're not really aware that they may just be becoming aware, if you like, that there's a credit bubble bursting. But the vast majority of investors aren't there yet. And I think the second thing is that this sort of comforting thought that, the central banks can always print their way out of trouble, and, negative equity doesn't matter in a case of a central bank, and anyway, the government's going to rescue them or whatever, backstop the whole thing. This, I'm afraid, is not the case. It cannot happen. So we need to understand this, and I think the earlier we understand this, the better for us. But I think there is an additional point, and that is that foreign ownership of US financial assets is now more concentrated on equities than on US treasuries. Right?
And as you just said, foreign ownership. So what does that mean? The foreigners are going to sell their stocks. There goes your stock crash. They're going to get out of the banks because the dollar's so good. The banks start collapsing. The Fed can't do anything about it. The Fed's supposed to save the banks from being greedy and spending their money incorrectly. They can't do that. They don't have the money to do it. They can't just keep printing. So this is exactly what I'm pointing out to why the crash is going to happen. Not only will the companies not make earnings because people can't afford it, but most of the stock market is foreigners, and they're going to pull, and he said they're already pulling it out. So they're going to sell. There's no buying taking place. There's going to be a lot of panic because people are going to watch their stocks go down. So I talked to my friend who's got his 401k. He won't buy gold because he's too afraid. And I said to him, well, you got your $500,000 401k. Now it's worth 400. Soon it'll be worth 300. At what point do you get the hell out and buy gold? Because it's not going to do you any good when it goes down to 100,000. You'll never get it back to 5. You could have bought a bunch of gold. Now you can't because gold's getting too high. How are you going to retire? You can't. That's the point. So we see it coming. That's why we've been buying gold for 4 or 5 years now. Buy as much. We bought it cheap, and now we're reaping the rewards. Where's Luke and Bobby? We're supposed to be at Capitol Grill, and anybody else who wants to join us. There's one in Pittsburgh, Detroit, and Tampa. I'm not sure where we're going. But Luke had to go out of town. Bobby, I don't know. Bobby does pop in once in a while. So, Bobby, when are we going to Capitol Grill? All right, back to
So at the last count, we were looking at something like 15 trillion of portfolio holdings in equities. And, as the equity markets turn south, they're going to start liquidating that. So you can see that there's an avalanche, a potential avalanche selling
Or
going to
avalanche.
develop there. It's a combination of feeling that this is the case and also understanding the real background to it. Drives me to the conclusion that this is something that could actually happen very, very quickly. I don't actually have the statistics. All we know is that overseas investors were caught up in the crash. I think Winston Churchill lost money in that crash, believe it or not. John Maynard Keynes lost money in that crash as well as other economists like Fisher, who at the time stated that he thought that that equities were at a new high plateau, or worse to that effect. But I don't think it's not like today, because the difference between then and now is that instead of gold acting as the international reserve money, we've got the dollar acting as the international reserve currency. And so foreign exposure to the dollar is far, far larger than it ever was in previous times. And on top of that, American brokers have been very, very successful in promoting US stocks around Europe, around the rest of the world, so that they're very much owned, if you like. The typical foreign investment, let's say for a European investment manager, the heaviest weighting is always in US equities. So, and you've got the comfort, if you like, as a manager, knowing that the dollar, if you like, is, you don't have effectively currency risk, in the sense that you're investing in an asset which is denominated in the reserve currency, if you see what I mean. It's very, very different for an investment manager in Europe, say, investing in the Japanese stock market, where the Japanese yen, whatever its merits may or may not be, is not the reserve currency. So it's built up in huge quantities. And of course, when you get a bull market, everybody just increases their positions, because it's as easy as anything to make money, and it's going up, so you've got to buy it. And the foreigners have been sucked in just the same as US nationals have. But it is a credit bubble. And as I say, the best way to get a grasp of how serious it is look at the debt bubble. And if you've now got a global economy that's contracting, partly because the credit bubble is too long in the tooth to support the underlying economies, and partly because of new US tariff policies, you can see that the financial destruction could be absolutely enormous, and it's inevitable. And the question then becomes, how far does it go down, partly? And what the hell is the Fed going to do about it? The Fed, I think, has a clear mandate under these circumstances to try and support markets in an effort to support the economy. And that means, as far as the Fed is concerned, that they've got to cut interest rates. But the exchange rate will demand a rise in interest rates. So, they can make the Fed funds rate zero, but they do that. The yield, let's say, on a 30-year Treasury could be 15-20% quite easily. A very steep positive yield curve. Why? Because of the risk of holding US debt.
Well, that was alligator, but he doesn't get, you can't keep printing, it has no value. Here, the BRICS payment system is launched. It's a bad video because it really doesn't, he kind of says it, but he doesn't understand it. But I believe it was launched early this week. I know they're doing payments between countries. China and Brazil are settling between them, and China and Russia, Russia, China with India. So all these countries are, excuse me, are already doing it, and they're getting out of the dollar. It's funny. This Beauty and the Beast. There's one version, and then there's the Disney version. And I watched the other version last night. It was actually very good. It's on Tubi, and very very good. I thought the girl from James Bond's in it. The last James Bond movie, his wife or whatever, and she's very good in it. But I like that. China's got problems. Who else? U.S. stock market wipes out $4 trillion. That was last week. China bankrupts building fleet. 100 billion subs now scrap. Basically, there's a lot of bullshit. A lot of countries losing their money. If you want to whiten your teeth, it's baking soda and something else. You make a paste out of it, and then you just brush your teeth with it, and your teeth go white. You don't need to spend on the whitening things. It's baking, I believe, baking soda or baking powder and some other. I can get that if anybody's interested. You can reverse your memory loss in weeks. Again, it's what you're eating. Again, I've got hair on my top now, so I've been putting castor oil and coconut oil, and I kind of mix them up, and I nuke them, and I just put it on my head, and I can't believe how much hair I got up here now. In a certain position, like it doesn't look it, but up here you can see the hairs, and it's just they're lighter right now. What else? Here's another
Just financing the deficit is going to be such an enormous cost. And financing the debt is going to be an enormous cost. They're not going to get it down. The political moves against every congressman or every senator are going to be against cutting down on his expenses in his area. And Trump is going to have a lot harder time than he thinks. And whether he will be seen as a good president or not depends on how the economy will perform. And since we are at the end of a monetary era, in my view, but it doesn't have to end in the next 4 years, of course. It can take longer. It always takes longer than you think. I realize that Trump, he might even be seen as a bad president if the economy really turns down. It's all about the economy and the stock market.
We have so much.
Yeah, but all that's from Biden, so that's the problem. Let's see. I think I had some others that weren't liked. Let's see. Here's one on Victor Davis. Europe is falling apart right before our eyes. This is all coming home to roost. So don't ignore it like, well, it can't happen here. Oh, and it doesn't matter that we're the reserve currency, whatever the hell that means. We forced it with the petrodollar, and you had to use dollars to do it. Now that's gone. And all this FX bullshit where if China wanted to buy Indian, they have to sell their yuan for dollars to buy rupees. Well, now they just buy rupees. So a lot of the U.S. dollar is not number one, and definitely a big problem. Let's see. Trump to end income taxes for those making under 140,000. Well, sounds good to me. I just did my taxes yesterday, and I'm very confused, but I'll look into it. Japan just issued an urgent warning. U.S. not ready for this. They're selling all the treasuries to buy gold. China's gold rush. Urgent warning on the U.S. housing market going bust. We saw that. China's two most lucrative industries collapse. It's the housing and something else. Now, let's take a quick look.
A resident of Pingdingshan stated that wage reductions at Pingmei Group are significantly affecting the local economy. As a city dependent on the coal industry, these cuts are disrupting the entire supply chain, causing widespread anxiety among residents. According to public records, Pingmei Shen Holding Group is a major state-owned energy and chemical company managed by the Henan provincial government. It has a coal production capacity of 70 million tons, placing it among China's leading producers. The company's registered capital is 19 billion yuan, with total assets amounting to 110 billion yuan. Online comments suggest that a sharp drop in export products has reduced the need for electricity, lowering coal demand as a result. China's economy has continued to decline due to 3 years of strict pandemic lockdowns, a spreading real estate crisis, and recent overcapacity issues. These challenges have impacted various sectors, leading to widespread layoffs, wage cuts, and a significant reduction in average personal income. The downturn is not limited.
So there's we know there's big trouble in China. Let's see. Trump and Putin set to redraw the world. Interesting. Alligator.
I believe strongly that the stock market is going to collapse. Whether it's going to do it this year or not, I think there's a high risk that it will do. Stocks are massively overvalued, but that overvaluation, no trees grow to heaven. We're not just going to see a correction now. We're going to see a major downturn in stock markets and a very long-term downturn. It could be years, or it could be decades, just like between 1929 and 1954. I believe strongly that the stock market.
All right, we saw that one. Anyway, a lot of good news out there, isn't there? And all you can do is own gold and watch it fly. Now here's an interesting one here. Okay, so brace yourself.
2024, the forecast what I would call an Orwellian plan. Frankly, I could not believe what I read. The European Union is actively exploring ways to use 10 trillion euros of citizens' savings. That's right, of citizen savings, private savings, and private investments, to be clear, for the EU defense/offense purposes. The European Union leadership has plans to use private capital. If you're in the European Union, this would be your savings. So they're going to use private capital for their military ambitions. Last week, I uploaded a video of Christine Lagarde announcing the launch of the digital euro, the CBDC, the central bank digital currency, that is planned for later this year. Make sure that you watch that video. I included a clip of her sharing the details where she shares the launch date. So my question then becomes, are they rolling out the central bank digital currency to assist with using private savings for military needs? Once the laws are passed, there's really not much that you can do as a citizen, as an individual, and a CBDC gives full control to the issuing entity, or in other words, the central bank or the government. So these are just my questions, but I think it is fair to ask these questions given the recent.
So again, she's not sure. This is why another reason, number 72, why we have gold and silver. They can't touch it. It's not in the bank, and therefore, I was doing my taxes yesterday, and interest income, none, because I don't have to report my gold. It's not really interest income. It's just like my Montana going up. I don't pay anything on that. So I don't know. CBDC's here, but you can see their method. They're going to use that to steal from you and to get the gold. All right, let's go back to the NFL. I think we covered enough there. Jacksonville signed 2, 4, 6, 8, 9. So people are re-signing their players. Jacksonville signed. They're gutting their team, and basically they didn't sign anybody. Jordan Lewis, a cornerback from Dallas. Eric Murphy, a safety. Miami Brown, a wide receiver. What is that? Nick Mullins from the Niners. 2 years at 6'5", $3 million a year. Yeah, okay, that's probably not a bad deal. He's pretty good. And then I don't know these guys. Again, Jacksonville, big trouble. Trevor Lawrence, not a good quarterback. So they don't address the issue. The issue with the economy is you're printing money. You're inflating the money. The issue most teams have is they've got a shitty quarterback, Trevor Lawrence. You don't win with him. Why you're not getting rid of the problem? That'd be the first thing I did if I took over Jacksonville. First thing I'd do is I just cut him. I said, there, you can have him. Guys, thanks. And then I try to draft a good quarterback from LSU. Kansas City restructured. Holy shit. Patrick Mahomes, 7 years at $450. That's over $60 million a year. What the fuck? Chris Jones, 5 years at $158. Nick Bolton, 3 years at $45. Hollywood Brown, 1 year at $11. Juju Smith-Schuster, 1 year. Kareem Hunt, re-signed, 1 year, 1.5. They signed a running back, Elijah Mitchell, never heard of. They signed a O-tackle, Jalen Moore, 2 years, $30 million, must be pretty good. Christian Fulter, a quarterback, 2 years at $20, and Gardner Minshew, 1 year, whatever. And that's the point. So you see, like Philly, we'll take a look at Philly when they get, they lose players, but you're not seeing the other side. So KC lost their one offensive lineman to the Bears. Here they signed another one who's offensive tackle, 2 years, $30 million. So he must be pretty good. Even though I never heard of the guy, Jalen Moore, but I couldn't tell you it was an offensive tackle. But that's what they do. They're signing all these guys, and you're looking at the guys that left. The key guy is Mahomes. Oakland, Max Crosby re-signed, 3 years at 106. That's $35 million a year. Adam Butler, never heard of. Malcolm Kuntz, never heard of. A bunch of nobodies. Nobody know. They signed Jeremy Chin. I don't know. Lonnie Johnson, safety, signed Eric Stokes, cornerback. I think I've heard of him. So they got a lot of defense. Another edge rusher with Crosby, a defensive tackle, safety, linebacker, 3 safeties they signed. Guys, you still need a quarterback. I'm surprised I don't see Geno Smith there unless he was a trade. San Diego, Khalil Mack, they re-signed. They re-signed some defensive linemen. Mekhi Becton was a trade, I thought. Offensive lineman. Najee Harris, I don't understand that one. And then Troy Dye, I don't. So San Diego didn't get better, and they're still kicking themselves after not getting Brock Bowers. The Rams restructured Stafford, 2 years, $58 million, so it's $29 a year. Jimmy Garoppolo, what do you got? Stenson Benson, $11 million for 1 year. That's a waste of money. Devontae Adams, 2 years, $46 million. So he goes with Puka-Nuka, and they get rid of Cooper Kupp. And Puna Ford, some defensive tackle they signed. So Devontae Adams should help with Stafford, with Pukanuka. They can all stay healthy. Miami, Zach Wilson, 1 year, $6 million. And that's it. A bunch of nobodies. They signed an O lineman, Zach Wilson, a safety, an O lineman, a safety, and a wide receiver. Good luck, Miami. You need a defense. You didn't sign anybody. Minnesota re-signed Byron Murphy, a cornerback. Aaron Jones, the running back. Will Fry's a guard. 5 years, $88 million. Jesus. Salaries the inflation's kicking into football too, right? Jonathan Allen, defensive tackle. Ryan Kelly, a center. Isaiah Rodgers, a cornerback. And Jordan Mason, a running back I never heard of. Oh, he traded from the 49ers, I guess. New England. Everybody loves this Drake May, but I don't love him. I think he stinks. They signed Carlton Davis, cornerback. 3 years at $60 million. No wonder the Lions didn't sign him. You can't pay the tackles and golf and the running back and Hutchinson and then go pay a cornerback $20 million a year. I'm not sure why New England's doing it. Joshua Dobbs, he sucks. I can't believe he's still in the league. New Orleans, Chase Young, re-signed, $51 million. The guy stinks. He's the number 1 or 2 pick, and he's been a bust. Honey Badger, Tyrann Mathieu was there. They restructured. Dante Pettis, a wide receiver from Boise, they re-signed. So they signed a safety. That's it. The New York Giants. Big play Slay. Why would he go to the Giants? 3 years, $36 million. That's why. Oh, no, it's Darius Slayton. It's not Darius Slay. My apologies. Danny DeVito, 1 year for $1 million. Danny, what a joke. Boy, a bunch of nobodies. I never heard of half these guys that they've signed. That's why the Giants are the Giants. Justin Fields to the JETSs, 2 years, $40 million. What a waste that is. At what point do you think he's worth any of that? At what point do you think he's going to start and you're actually going to win games? See, if he feels if he goes to the worst teams, then he has a chance to play because he can't play on the better teams. Philadelphia, Zach Bond, linebacker, he's good. Re-signed him. Shaquan Barkley, re-signed, 2 years, $41 million. That's why they're letting all their defense go. Doria Thompson-Robinson traded from the Browns, 2 years, $3 million. Yeah, that's why he's in the league. And a trade for the Texans for a guard, Kenyon Green, and Joe Yuki signed a linebacker. I don't know. Well, they got Bond. They got the big guy. They got the Georgia guy, so they're right. Pittsburgh traded for DK Metcalf, 5 years, $150 million, $30 million a year. Jesus. Malik Harrison, a linebacker, signed. Donald Parkin, I don't know. Ryan McCullum, a center. Gainwell, I like from the Eagles. He's a running back. That'll help them. They need a running back. The 49ers. Re-signed a few guys. Signed Luke Farrell, a tight end. I don't know. Don't know. I've never heard of these guys. The Niners, we will not be betting on. We're not going to bet on Seattle either next year. They signed Cooper Kupp, 3 year, $45 million. Ernest, but he's always injured. Let's see. Sam Darnold, 3 years at $100 million, $33 million a year for Sam Darnold. Boy, is Seattle, we're going to make a lot of money betting against Seattle. Jesus. They signed a lineman, Valdez-Scantling. So you get rid of Tyler Lockett and Metcalf, and you sign Valdez-Scantling and Cooper Kupp. I don't think he got the better of those. And DeMarcus Lawrence, they signed from the than the Cowboys. Tampa Bay re-signed Chris Godwin, Sterling Shepard, Hassan Reddick. They signed, I think, was he at the Jets or the Eagles or something? Anthony Nelson re-signed, and that's it. Tennessee, probably the worst team in the league with Carolina. Signed an offensive tackle, a linebacker I've never heard of, a safety, a punter, and re-signed a long snapper. Really, that they're re-signing long snappers. They're that good. This team's terrible. And Washington, they signed Debo Samuel 1 year at $17 million in a trade. Laremy Tunsil, the guy who smoked drugs in a bowl or something. 2 years, $42 million. Bobby Wagner from Seattle re-signed. Zach Ertz re-signed. John Bates, tight end, re-signed. Signed Javen Kinlaw, 3 years, a defensive tackle. Will Harris, the safety, they signed. Marcus Mariota, backup, I guess. Where's Sam Hartman? He's much better than Mariota. Noah Brown re-signed. So that's what you got there. So I will show you this. This is a girl from Robinhood. I am Lisa, a Robinhood trading assistant. I saw your reply. Do you still hold U.S. stocks? It's none of your business. I'm not going to respond to you. They want me to. She's got a big thing for me to buy stocks. Okay, first of all, I don't buy stocks. I buy gold and silver. Secondly, you're not getting that answer from me. I'm going to delete it because that's none of your business. How you want to come to class. I'm not giving you my free information, Robinhood, and you're trying to with this wonderful theory formula you have get me into stocks. Well, why would I want to be in stocks? They're ready to collapse. That's the point of the class. So I don't want to be in stocks or whatever Robinhood is selling. I don't need that. We are up here. Robinhood's down there. Why the fuck would I listen to Robinhood? Anyway, so that's what's going on. Free agency, then we'll get into the draft. I think it's in April. So let's look at the bracket. Make your man. See, I'm not. How can you pick women's? It's hard enough picking the men's. So where is the bracket? I heard there's like 100 teams from the SEC in there. Well, where is the bracket? I mean, I can't even just print the bracket, just show the bracket, right? Kind of bullshit. West Virginia threatens legal action over snub. How can you sue somebody like this? Auburn got the number 1 overall. Where can I get a fucking bracket? Okay. All right, so here's game 1's days, and I'm going to read it if I can see the 1 seed, which I can't see the seeds. Unbelievable. Let's see if I turn it this way. Can I see this? Yeah, okay. So we got Auburn playing some walk-in games. So 64 teams isn't enough. We have to have 4 more play-in games. So it's a 68-team tournament. Even though the first one's in the tournament doesn't really count, but they get to play the 1 seed. Louisville, Creighton. Denny Crum's not there anymore. Michigan's a 5 seed against UC San Diego. Dan Faust's team. A&M against Yale. So let's go through it. Old Miss against San Diego State, it looks like. UNC. Iowa State against Lipschitz. Marquette against New Mexico. Michigan State against Bear Bryant. Florida against Norfolk State. Connecticut against Oklahoma. This is the next one. Florida's the next 1 seed. So Auburn's the 1 seed. Florida's the 1 seed. Connecticut plays Oklahoma, which would have been a good game 20 years ago. Memphis is a 5 seed to Colorado State. Maryland plays at the Grand Canyon, and they got a little team at the Grand Canyon. They're the 4 seed. Drake is the 11 seed against Missouri. Texas Tech, UNC Wilmington. Kansas is the 3 seed, gets Arkansas, and looks like St. John's is the 2 seed against Nebraska, Omaha. Jesus. Pretty pathetic tie. All right, let's go to the other one. Duke, the number 1 seed against somebody. Baylor is the 2 seed against Old Mississippi State. Are they the 2 seed? No, they can't be the 2. They must be higher. 3 seed Oregon against Liberty. The 4 seed Arizona against Akron. BYU, Virginia Commonwealth. Wisconsin's a 3 seed against Montana. St. Mary's is a 2 seed against Vanderbilt. Alabama, Robert Morris. The other bracket, Houston goes against somebody. Gonzaga against Georgia. Interesting. There, Clemson, a 5 seed against McNeese. Big Purdue. I think they're a 6 seed against High Point. I don't know. It's hard to read the numbers. Then we got, I don't know who the hell this is. Somebody against Texas. Xavier. Kentucky is a 3 seed against Troy. UCLA against Utah State. And the 2 seed is Tennessee against Holford. All right, I got to get a better view of the bracket. But anyway, who knows? I mean, you've got to know the teams to know the matchup. So I'm sure there's over teams and under teams and A teams and probably not Z teams. And so therefore, find your over teams by score with no defense. Your under teams don't score with good defense. Your A teams score and a good defense. I would guess that would be Auburn. And then your weak teams are obviously the 16, 15, 14 seeds, probably can't score and have no defense. So the best way to play this, you want to play overs with overs, unders with unders, A's against whatever W's or Z's, whatever we got here. But you got to know the team and rank them. That's the only way I could play this. I don't know one player out there. I have no interest in college basketball. I don't have an interest in pro basketball. So that's what you got if you're going to play it. Again, I would play it for fun. I never like doing tournaments. So I don't know what's going to happen next week. I'm going to worry about today. So I would just bet the games as they're going. Just like football. I can't sit there and bet the Super Bowl, next year's Super Bowl today. Who the fuck knows? Mahomes gets injured, they're gone, or Daniels gets hurt, or Barkley gets hurt. I mean, you have no idea. So you got to see the new coaches. You've got to see the draft before you can make any. Look at Daniels. He comes in, and Penix comes in, and Bo Nix, and all of a sudden they're a whole different team. I would bet heavily on Penix, at least Atlanta winning their division and making the playoffs. I would bet heavily on Atlanta doing that. Washington, I would not bet Washington to make the Super Bowl. We got to see the draft. They need better defense. They're not going to go. They can't beat Philadelphia with this defense. So they have to get a better defense. You always want to bet the defense with a good quarterback over like a Joe Burrow with no defense. And it looks like Joe Burrow is going to be an over. And we're going to bet Chase and T. Martin and Burrow. We're going to bet over every game because you can't really stop them. Profit, did you fill in any March Madness brackets? No, I won't. I have no desire. I think it's kind of silly. It's just a marketing ploy, but I think it's just kind of silly. I mean, not only do I not know any of the teams, but what am I going to bet Auburn to win it all, or Florida, or Georgia, or Tennessee? Tennessee won the SEC. Who knows? Or, the team's hot. Well, you don't know that. It's against that. Every game's like poker. It's a different hand. I got pocket aces here. Next hand, I got 3-10. I mean, so there's no momentum. You just have to look at it like that. Anyway, that's what's going on. Let's go back to football. We kind of got that. Let's go back to our goal. Let's see if we're at 3,100 yet. 30.34 up $36. And again, there's very little. There's a little slight down at 10 o'clock, which it happens like clockwork. And then after that, it goes up. So 30.34. And look at silver, 34.11. It was just at 34.10 now. It's holding 34. Here comes 35. Here comes 50. 35 gives us 50. So my advice is to go, if you can afford gold, buy it quickly. Even a quarter ounce still get for about $8.50. Tenth of an ounces, they'll work. I told Alyssa, I gave her the quarter ounce when it was $3.50. And I said to her yesterday, I says, it's going to be, you're going to look at $1,000 for your quarter ounce. And that's what's going to happen. And she keeps it. I mean, again, you don't want to get out of it to buy worthless dollars. That's why it's not going down. This is just the sale of the century. We are in on the ground floor of the biggest sale of the century we could get into. Just get on the elevator, 30.34, and it's still cheap. It's not even close to the real price, which has a 1 in front of it. It's 10, 13,000. Wouldn't surprise me at all. DeAndre, hello. Been trading gold. It's been money. I don't know if I would be trading it. I would just be buying physical because it's going to go up a lot higher, but it's just going to keep going. There's no factor that's going to create it to go down because since the central banks are buying the big bars, the 400-ounce bars and thousands of tons here, there, and everywhere, the only way the price would go down is if they do the derivatives, but everybody's buying it, which means and nobody's going to sell it. Keep in mind, COMEX is not a real free market like eBay. I put it out, somebody buys it, it goes down. This is all derivatives. This is the pricing comes from there. So it's not even if they're just profit taking, which there won't be. And you're opening the door, as Alligator said, about all these markets imploding, stock market's going down, all the European or all the outside of the U.S. pulling their money out of the stock market and everything. Housing collapses. As you need money, you sell your assets. So your first assets you're going to sell. In America, most people are going to sell their stocks. The Europeans are going to sell their stocks because they want to get out of dollar. As we know, COMEX is not free market, so it's just priced in that. But I highly advise physical, because if you're trading gold, I don't know how you trade it. I would certainly, you're still in dollars. That's your mistake. So you're making money on it. It's like Bitcoin. You're making money on it, but you're still in dollars, and that's the problem. So let's see what our Bitcoin friends, or what's going on there. And Bitcoin is down to 81,000. I love the Bitcoin. It was 110, and then it goes to 110. Then it goes down. Now it's at 81. So what point are you in Bitcoin till? How much heat can you take in it? So that's the real problem. Anyway, again, that's in dollars. Gold is priced in dollars, but it's gold, so it doesn't matter. You go with the ounce of gold, it's 30.30. Best place is to buy physical. Go to a coin or jewelry store. Mine's called Redford Coin and Jewelry. You don't want to go to a pawn shop. You can buy it online, but you got to check the prices and be careful because you got to pay for shipping and sometimes tax. The best is to find a coin shop near you and check them out. They should not. I don't know what city you're in or state. In Michigan, there's no tax. There's no sales tax on it. And since I drive to the store, I don't have shipping to worry about. So I just go, give them some cash, get the gold, then run home. Never put it in the safety deposit box because those, you'll never get the money out. When they close the bank, they will take the money out. Texas. Anybody here from Texas to help the DeAndre? No, let's see. In Texas, the sale of gold, silver, new asset coins, or gold, silver, or platinum is exempt from sales and use tax. So there's no tax there, DeAndre. And make sure he doesn't charge you tax. It's a simple Google search. So if you need to, and he says, "Oh, I got to charge you tax," you say, "No, you don't. There's no, it's exempt." And I know it's that way in Michigan. So that means you shouldn't pay tax. If you go into the store, then that avoids shipping, and you make sure you get it. Now, if it's a new store and you don't know them, have the guy prove that it's real. He should put it on one of those meters that tests the gold for validity, right? Don't say, "Oh yeah, I can guarantee it." No. Show me. Put it on your meter. If it doesn't have a meter, run, because it's probably not real. But as long as it's, this is what I always do. This is the gold you should buy. You're just trying to buy an ounce of gold. You're not trying to buy collectible gold or anything like that. So you want to buy maple leaves, which are fine, and it'll say gold on it. The Cougaran is fine. The Eagle is fine. The Mantle rookie card is fine. The Rolex, which is fine. And what do we got here? We got two more Eagles. All right, so those are Liberties. So like these three. So that's what you want to buy. Mostly those. You can buy a Philharmonic. You can buy a Jerry Rice rookie card, 82 grand. It's got to be a PSA 10, of course. Or the Philharmonic, my favorite. So any of those, they'll say 1 ounce of gold or a half ounce, quarter. It doesn't matter. You're trying to buy gold. You do not want the MS70s or they only made 10 of these. You don't care. You're trying to buy gold. Stick to the game. Those countries, those mints are going to be good. It should look gold. The Cougaran might be a little pinkish because of what they mix it with. But as long as it's 1 ounce of gold, that's all you care about. And stick to those. But go to a store that looks decent. Check the prices out. Maybe call 3 or 4 stores. They should be like 110 over spot, and that's normal. That's the price you pay to play the game. So gold's at 3,030, let's say. So you're going to pay 31.30 to 31.50 for your gold for an ounce. The half ounce would be roughly 1650 or so. The quarter ounce will be about 900 now, and the tenth of an ounce will be about 350. Let me go to my price sheet. So this is me at my store, and he gives it to me here. So he's telling me what he's got. So 1 ounce gold eagle was 302. This is like a week ago. It's spot plus 110, and then the 1 ounce buffalo 110, the Cougaran 70 over, the maple leaf 85, and the gold bars 70. I prefer coins to bars, and you can see what he's selling it for. He's a little high in his halves and his quarters, but he never has too much of them. So you can see, like Cougaran's only 70 over. You're buying an ounce of gold, that's fine. That's all you care about. If you had any, I might have bought one, but he didn't have any. He has some eagles and she had some maple leaves. Mostly it's people selling their gold to the guy, and that's what he sells. But that's good because he's going to check that out. He doesn't want bad gold. He's going to make sure he checks it when you bring it to him. So I've been going there for like 3-4 years, so I'm not concerned that it's not real gold. Plus, I can see 1 ounce. You can tell the look; it's gold. So you get a nice shiny one. Let's see. I mean, you can see there, they're pretty shiny in gold. You'll know it when you see it. And if it's like this one could be a little dull because it's mixed with other things, but it's still, this is quarter ounce fine gold. So it'll say it on the thing, 1 ounce, quarter ounces. This is a tenth of an ounce. You're just trying to accumulate inventory because the dollar's going out and gold is going to be the money. And so that's what I warn you about when you're doing trading. I don't know if it's options or what, but be careful. You're still in dollars, and that boat's sinking. So you got to get off that boat into physical. 10-4. Thank you, Professor. Appreciate the knowledge you give out. My pleasure, DeAndre. Happy to do it. Is it a way like buying 500 a week possible to accumulate from each check? Does it make sense to you? Yeah, I mean, what you would do with 500 a week, you could have two options. One, you could at 1,000 buy a quarter ounce. 2,000, you really can't buy the ounce anymore. So you could buy a half an ounce with, but that's going to take you three checks. You can buy a quarter ounce with 900. Well, here they're 812. Here this one's 851. All right, and you can see it's not an auction, so 851. So two checks get you a quarter ounce, and then the next check maybe you buy 10 ounces of silver at 30. It's $2 over the spot, so it's 34. Be cost you 36. So buy 10 ounces is 360. So right now you're probably, if that's how you can buy it, then that's what you would you'd buy more silver, but you get a little bit of gold because gold moves very, very fast, as you see. Gold's up $30 today. Silver's up 50 cents. That's why we buy gold. But there's going to be a point when it gets so expensive, people will go to silver because they'll all have to get out of dollars. So you can buy, I'd buy 10, 20 ounces a month, and then the rest, a quarter ounce of gold, a tenth of an ounce of gold. I own about 30/10 of an ounce of gold. It was like $250, $220, and I just, okay, I'll buy it. As opposed to buying the silver, I bought another tenth of an ounce, but I got 700 ounces of silver also. So when silver starts moving, we see $100 silver. I'll be very happy because that'll be 70,000 I have. It's been sitting waiting, and Luke has like 5 different big boxes of 500 ounces a shot. So Luke will be a happy fellow when that happens. But that would be the best way, DeAndre. But definitely think of it like this. This is monopoly money. Right? This is worth nothing. You're getting $500 in monopoly money. Only they're not giving you the orange monopoly money. And all the extra you have, and you pay your bills, then you take what you can afford, and you want to spend it all in gold and silver. Leave a little bit in your leave something in your savings or in your safe, enough to pay some bills or go on a little vacation or something. But any of this that you can afford to get rid of, because this is worthless. So what you're doing is, I call it Rumpelstiltskin. You're getting out of this, and you're going to buy gold and silver. You're turning this useless monopoly money into something valuable like gold and silver. So it's as much money as you have to get, to go buy gold and silver with. And then you just keep collecting it. I don't call it hoarding or whatever, stacking. I hate that term. I collect it. And you're just going to collect and collect and collect as much as you can. And as you see the prices doing what they're doing, you're not in it too late, but I've been doing this for a long time. And like I said, I gave a quarter ounce to my girlfriend at I said it's worth $350. Now it's worth $850. So that shows you how long ago I bought it. But I've been buying since 16, 17, 1800 an ounce. And now we're at 30, and I have no desire to profit take. There is no such thing as profit taking gold and silver. You hold it in there and you let the price run, and you just hold it and hold it and hold it, because where are you going to put it? Okay, maybe you're going to buy a Rolex with it. Maybe you're going to get a Mantle card, a Jordan rookie, a Brady card. Okay. But that's otherwise, it's just, you don't want to put it in the bank. The banks are going to collapse. The stock market's going to collapse, and your $10,000 is going to be worthless. So there's no, you can't sell it just to put it in the bank and say, yeah, I made $5,000. You can't do that. It doesn't make sense, because the gold's going to keep going up, because nobody's stupid enough to sell it at this point. It's not something you profit take like a stock. So keep that in mind. So the price should just keep going to the moon now. And there's no reason, there's no profit taking. And I think there's no goal left for COMEX. And I think COMEX is going to go out. And I think then we're going to really see some serious money, because Russia and China are going to want $10,000 an ounce gold because they got it all. Funny how Putin's the smartest kid in the room again, buying all this gold, and Xi, China, and they're the smartest ones in the room. And the American idiots, oh, well, we sold it to China. We don't have any in Fort Knox. I mean, what is that? Well, we'll do Bitcoin. Yeah, I don't think so. Don't get in. If you're in Bitcoin, get out of it and go buy gold and silver. That's the best advice I can give you. If you got in at $2 like everybody else, and now it's 81, I would highly advise you to sell it. You're going to get taxed on it, and go buy gold and silver with it. That would be the best thing, because gold and silver is just going up. Bitcoin's already gone up. It's coming down. So do you want to be in the one going down or the one going up? And gold and silver is real money. It's limited. It can't be counterfeited and inflated. And there's way more demand in that than Bitcoin. So kind of do that. So that's what I would do. And it's really the perfect retirement vehicle. As the dollar loses value and you're in stocks to retire, then you're kind of fucked, because, well, listen to a retirement planner. Well, you'll be in stocks that give a good dividend, take the dividend each month to pay your bills. And yeah, but what if the dollar isn't worth anything? What happens when the stock market crashes and my dividends are zero and I'm fucked because you told me to be in stocks and all the stocks crash? Or you could be in gold and watch. Nothing can happen to your gold. It's an ounce of gold, still an ounce of gold. It's still got value. It's going up. And if I need money, I go sell it. That's the only way you can retire. You don't need life insurance. That is your life insurance. You sell an ounce of gold, pays for your life insurance things. You give it to your kids or your wife. You're all set. They're all set. That's it. That's your retirement. You're gonna make a ton on it, and you can't lose, because at this point the demand is so strong, and there's no reason to turn the demand off. What else can I get into? Oh, euros, Swiss francs. How about the Deutschmarks? I'll go back into them. I mean, and you got BRICS. All the BRICS countries have to get gold because their trading is going to be in the gold-backed currency. So the demand's huge. You got 20 countries in it now, and there's going to be, I think, 100 at the end of the day. Everybody in Asia, Europe, Africa, the Middle East, and Latin America are going to be. I already got Brazil in it, and Argentina's too stupid to join. And they're going to go down with the ship on the U.S.'s side, but they're all over the place. And it's not necessarily people want to get a dollar. They don't want to be harassed by Trump. I'm going to give you 100% tariffs. Oh, hey, shove it up your ass, Trump. That's no way to do business. If you would do business, then nobody would leave you. But the way you bully people and you take the ball, if you can't play, you're taking the ball with you. This is America. What a bunch of idiots. Call them like I see them. McMahon. Watching way too much wrestling. So I think that's it. So look for 3,100 by the end of this week, on its way to 3,500, on its way to 5,000. Gold is the most undervalued asset in the world in the last 100 years. And it's the one thing that nobody profit takes. You profit take Amazon and Apple, and it's gone up. You ain't profit taking this. You do not profit take it, because there's nowhere to put it. Okay, I got 100 ounces. It just went up. I just made $10,000. Okay, I'm going to profit take it. What do I do with my money? Well, there's dollars I can put. I can put it into a stock. No. I can put it in a bank. No. maybe I buy rubies and sapphires and diamonds, but no. What do I do with it? I mean, why shift it? You want to be Rumpelstiltskin. You want to put it into gold, not, you never want to take out of gold. Like I said, you need to go on a vacation or pay some bills. You cash in one and you get the money to do it. That's okay. But otherwise, you do not want to be getting out of gold into what? You're getting off the Titanic. You're getting on the lifeboat, gold. So why would I get off the lifeboat? Where am I going to go? Well, there's the Titanic that's sinking, or the Carpathian that's 3 hours away, or I can sit in the lifeboat and not drown. Yeah, maybe I'll take that choice. All right. Anything else? Questions, comments? Nice to see you, Nick, today. It's been a while. Did you hit the Super Bowl that I always give out? I hope you did. We won it. Anyway, I'm waiting for Luke and Bobby. Go to Capitol Grill. Anybody wants to join us? I don't know which one we're going to. Luke's in Pittsburgh, Bobby's in New Orleans, Tampa, and I'm in Detroit. We don't know which one we're going to yet. But anybody care to join and celebrate $3,000 gold? See, that's how it was done 8-9 months ago. That's how sure I was gold would hit 3,000. And the guys are, joking with me, but now they're not joking anymore. They're like, yeah. Now it's going to be $4,000 gold for the next visit at the Capitol Grill. I might go there anyway, just because gold's at 3,000. Anyway, this is it's such a sure thing too. I mean, I'm at the point where this is never an opinion. This is fact, and you can see I've called $3,000, and I'm calling $5,000 because it's there's nowhere else to go. The only other thing you could get into is money backed by gold, which would still need more gold and drive the gold price up. Profit, okay, Profit, anytime. DeAndre, no, I'm not into real estate. There's no reason to be. My portfolio is diversified. Gold, different types of gold, the Philharmonic and the Eagle and the Maple Leaf. Silver, and then as I show you my Montana rookie card and my Tom Brady rookie card and my Mantle cards and a nice Bobby Orr and those. But what am I going to do in real estate? What are you going to buy, land or a house? Walk me through that, DeAndre. What do you want to buy? And why do you think you're going to make money on it? Is there demand for it? I just showed you all the housing markets crashing in China and here. People can't afford it. They got to lower the price. Some call it deflation. I call it the market adjusting to the selling, adjusting to the buyers. That's not deflation. It's the market. People want to have a name for everything. And they say, oh, deflation's no good. Deflation's fine. It's when you fuck the money up, it's no good. As long as the money's good, and that's the beauty of gold. So you're in gold, it's going up because the demand, you got to understand the frenzy that's going to, so it's like, in Titanic, it was one boat sinking and you had that frenzy at the end when everybody realized, oh, fuck, we're sinking. And you had that frenzy. Well, what's happening here is you have 20 Titanics sinking at the same time, called Switzerland, Europe, England, and Switzerland, and Sweden, and all those countries, and Poland, and all every currency, Japan, they're all sinking at the same time. So all these people are going to go into the frenzy in the same time. And there's one lifeboat called gold and one lifeboat called silver. And that's the only lifeboat they can go to. So you got 10 Titanics, and then you have the frenzy of all these people realizing the boat's sinking. And when they realize it, price of gold, I don't even know if I can, I'm conservatively estimating 25,000. Conservatively, not these formulas where these idiots say, "Well, we got 8,000 tons of gold in Fort Knox." We don't have any gold in Fort Knox. It's got nothing to do with the gold in Fort Knox. It's the market. It's all these people needing gold and silver versus this little supply of gold and silver. So I don't care. You don't. That's not. You don't revalue it with some stupid formula. Looking at the 8,000 tons of gold, it's the supply and demand. It's the market that sets the price, which we're not at yet. Yeah, all metals. I'm talking gold and silver. Don't make more out of it than it needs to. The old saying is KISS. Keep it simple, stupid. Just take the sure bet and off you go. What are you going to do in metals? Platinum, palladium, nickel, whatever. Why? Just get into gold and silver. Silver is probably the best bet because it is money and it is needed, and people are getting off into the frenzy of the 10 Titanics that are sinking. They're not going to buy nickel and copper, or maybe copper, but not nickel and palladium and platinum. No. They're in gold and silver. They get into real money because they're panicking, and that's what you understand. So I'm in metals, gold and silver. That's it. I don't need anything else. All right. Anything else as before I leave? All right. Well, DeAndre, welcome. Prophet, of course. Nick, yep. Bobby, Luke, where the hell are you? And I will talk to everybody tomorrow. Again, www.teaserking.com. DeAndre, no, I'm agreeing with you about it. Gold and silver, your perspective. Yeah, okay, that's fine. Yeah, it really is the best thing. And I back it up. That's what I have. I show you what I have. So yeah. So, think about the other reasons. What am I going to do in real estate? How am I going to make money at it? Do I have to buy a house and fix it up? Or am I buying a house, but the housing market's crashing? Or am I buying land and putting up a golf course or a driving range? Or what am I doing with the land? Real estate, just because, it doesn't make you money as you think. You have to maintain it. If you buy, let's say you buy land and you're going to put up a shopping center on it, a strip mall on it, a restaurant on it. How the hell are you going to do that? You got to build it. Oh, I'm going to buy a house, or I'm going to buy a house to fix up. Do Airbnb with it. How much money is that going to make you? What a pain in the ass. You got people staying in your house. Hopefully you don't trash it. Hopefully you get paid, and then you got to keep maintenance up on it, and real estate and property taxes. Got to pay the rent, the mortgage. I don't do anything. I just buy gold and silver and sit back and relax. And there it goes again. If you have 100 ounces, every 100 it goes up from 2,900 to 3,000. You just made 10 grand. You did nothing. You just bought it and it's sitting in a safe, and that's it. And you made 10 grand. Oh, but I bought it at let's say 2,000. Oh, 3,000. Oh, well, that's 10 times. I just made 100 grand. I did nothing. I was just intelligent enough to buy it. And that's the point you need to take out of it. Why do all the work? Just go buy it and relax. Go golfing, go on vacation, go to Vegas. But just stay out of toilet paper monopoly. Stay out of monopoly money. Right? If you get a lot, go buy gold and silver with it. All right. So anyway, again, welcome aboard, DeAndre, and anybody else. It's gold. It's going to blow through 3,000. I'd say by the end of April, it'll be 4. By summer, 5. By July 1st, maybe 6, 7. Because now people are realizing they've been made off. They've been scammed. Gold's no good. All right, it won't hit 2,000, and it finally broke 2,000. And what happened? Then it got all the way to 3, and it struggled at 3 for a couple of days, and now it broke through 3, and now we're at 30.30, 30.33, and nobody wants to short it because then they got to pay the people who are taking delivery, and they can't get it. There's no gold to get, and that's it's like the Super Bowl. The stadium sold, but more people want it, so then it goes into the secondary market, and that's where we're at with gold now. I do believe it's in the secondary market. Bricks has bought the shit out of it, and silver, they just don't have it in COMEX. And bye COMEX. Hello, free market. And in the free market, this thing's going to run. So much as if you can buy a half ounce, I would go buy it. Like, you're not waiting for it to go back down. It's buy the half ounce today. Buy it before 3,500. And with that, I bid you a fond farewell and have a nice night. And I will talk to you tomorrow. All right. Again, www.teaserking.com. You get my email there if you want to ask me questions or comments. Please feel free. All right.